Well, hello there. This is Praveen again. In today's video, I'll be talking about TFSA. Specifically, what is TFSA? How does TFSA benefit you? Who can open this account? How much can you contribute? The consequences of over-contribution, withdrawal from it, does it affect your federal credits and benefits, and the tax implications of US stocks in TFSA. So what is TFSA? TFSA stands for Tax-Free Savings Account, and it's an account in which the contributions, the interest earned, dividends, and capital gains are tax sheltered and can be withdrawn at any time. While it is called a savings account, a TFSA can hold numerous investments like bonds, mutual funds, as well as cash, and therefore I sometimes wonder why it is called or not called tax-free investment account. The TFSA was introduced in the year 2009 to encourage Canadians who are 18 and older to set money aside tax-free throughout their lifetime. Now, because the contribution to a TFSA account is after tax amount, the contribution to the TFSA is not tax deductible either. Also note that you cannot offset capital loss against capital gains in TFSA, and you cannot earn dividend tax credit in TFSA as well. This is fair since you do not pay tax on capital gains and dividends in TFSA. Now, how does TFSA benefit you? In simple terms, any amount contributed as well as any income earned in the account, for example, investment income and capital gains, is generally tax-free and can be withdrawn without any tax implications. Also, an important feature of TFSA is that any withdrawal from TFSA does not affect your entitlement to federal income tested benefits and credits. Who can open a TFSA account? Any individual who is 18 years of age or older and has a valid social insurance number can open a TFSA account. You cannot open a TFSA account until you turn the age of 18. However, on the day you turn 18, you could go and contribute the full amount of the dollar limit for that year. For example, a person turns 18 on June 5th, 2018. He or she cannot open a TFSA account until that day. However, on June 5, 2018, he or she can open a TFSA account and contribute $5,500, which is the full dollar limit for 2018. Even if you do not open the TFSA account when you turn 18, you still keep accumulating the contribution room throughout your lifetime. For example, a person turned 18 in year 2009 and has not yet opened a TFSA account. As of 2020, that person has accumulated a contribution room of $69,500. Now, how to open a TFSA account? You can open a TFSA account at any bank, a credit union, insurance company, or any financial institute by providing your SIN number and your date of birth. You can have more than one TFSA account, but remember, your total contribution room does not change. Next, types of investments you can have in TFSA. Generally, the types of investment you can have in TFSA are similar to those that you can have in RRSP, namely cash, bonds, ETFs, securities, and mutual funds as well, just to name some of them. Self-directed TFSA. You can set up a self-directed TFSA if you wish to build and manage your own portfolio by buying and selling different investments yourself. Foreign funds. You can contribute foreign funds to your TFSA. However, your issuer will convert the foreign funds to Canadian dollars using the exchange rate on the day of the transaction and report that to CRA. Also remember that your total contributions should be within the contribution room in Canadian dollars. Talking about contributions, your TFSA contribution room is the maximum amount that you can contribute to your TFSA. Starting in 2009, TFSA contribution room accumulates every year if at any time in the calendar year you are 18 years of age or older and a resident of Canada. You will accumulate TFSA contribution room for each year even if you do not file your income tax return. The annual TFSA dollar limit for the years 2009 to 2012 was $5,000. For the years 2013 and 2014 was $5,500. For the year 2015 was $10,000. For the years 2016 to 2018 was $5,500. For the year 2019 was $6,000. For the year 2020 is $6,000. The TFSA annual dollar limit will be indexed to the inflation and rounded to the nearest $500. Investment income earned and the changes in the value of the TFSA investments in your account will not affect your TFSA contribution room for the current or future years. Next question is, where do you find your contribution room? You can determine your contribution room by taking a look at this table on the screen. Look at the year in which you turned 18, and that would be your contribution room as of 2020. I would stress that this table is on the assumption that you have never made any contribution at all. For example, if you turned 18 in the year 2015, your contribution room would be $38,500. Again, assuming that you never made contribution to TFSA. If you had made contributions or had a withdrawal, your available contribution room as of 2020 would be your total contribution room accumulated as of 2020 minus past contributions plus previous year's withdrawal. As an illustration, let us say you turned 18 in the year 2016. Fast forward to 2018. Your contribution room would be $5,500 plus $5,500 plus $5,500 equal to $16,500. In 2018, you made a contribution of $10,000. Now this would reduce your contribution room to $6,500 in 2018. In January 2019, you get the $6,000 of contribution room as usual. Now this will add it up to $6,000 plus $6,500 equal to $12,500 of contribution room. Let's assume that you made a withdrawal of $7,000 in 2019. On January 1st, 2020, the $7,000 withdrawal would be added back to your contribution room, plus you get the usual $6,000 dollar limit for 2020, bringing it to $13,000. And you already have $12,500 carried over from the past. Your new contribution room for 2020 would be $25,500. How is your contribution room determined? The TFSA contribution room is made up of the total of all of the following: your total TFSA dollar limit, any unused TFSA contribution room from previous years, any withdrawals made from the TFSA in the previous year. The maximum amount you can contribute to your TFSA is limited by your TFSA contribution room. All contributions made during the year, including replacement or recontribution of withdrawals made from a TFSA, will count against your contribution room. There are certain transfers of TFSA that do not play any part in the calculation of contribution room. These are called qualifying transfers. These transfers are between your own TFSAs and those completed upon the breakdown of a marriage or common law partnership. These transfers must be completed by a financial institute. If you withdraw this amount yourself and then go and deposit into another TFSA plan, there may be tax consequences and may affect your contribution room as well. Now let's talk about withdrawal. You can withdraw any amount from your TFSA with no tax or penalty. But remember, if you decide to recontribute that amount, there are special rules, and let's talk about it. Withdrawal amount will be added back to your contribution room only in the beginning of the following year. You can recontribute your withdrawal in the same year only if you have enough contribution room still left. A direct transfer must be completed by the financial institute that you're dealing with. A direct transfer is when one institute transfers your TFSA to another financial institute. Let us now discuss about recontributing your withdrawals back into your TFSA. You can recontribute your withdrawal back into your TFSA in the same year only if you have enough contribution room still left. If you recontribute and you do not have contribution room, you'll be making an excess contribution to your TFSA. You'll be charged a tax of 1% per month on the highest excess amount of contribution each month for as long as that excess amount remains in your plan. This will continue until you withdraw that excess amount or your contribution room grows enough to absorb that extra contribution. I would advise you to withdraw that excess amount in order not to pay unnecessary tax. As an example, you opened a TFSA account in 2014 and have been contributing maximum every year. By the end of 2018, you will have contributed a total of $32,000 in your account. In January of 2019, you contributed $6,000, the maximum. Assume sometime during 2019, you withdrew $5,000 from the account for some reason. Later on, you decide that you do not need that $5,000. Since you already have contributed the maximum allowed for 2019, you have no room left in your account. If you want to recontribute the $5,000 or part of it, you will need to wait until January 1st, 2020. In case you recontribute any part of the withdrawn money before January 1st, 2020, you will be charged a tax of 1% on the highest excess amount in your TFS account for each month that the excess amount stays in the account. As an example, in January 2019, you contributed $6,000 to your TFSA. During 2019, you had the following three transactions in your account: a withdrawal of $3,000 in April, a recontribution of $3,000 in July, and a withdrawal of $2,000 in August. Now, because you had used up your dollar limit for 2019 in January, the $3,000 recontribution in July caused an excess amount of contribution of $3,000 in the month of July. The August withdrawal of $2,000 reduced the excess amount of contribution to $1,000 for the month of September, October, November, and December. Your tax will be calculated this way. For the month of July and August, the highest excess contribution was $3,000 for those 2 months. So your tax would be $3,000 times 1% times 2 equal to $60. That's for July and August. The highest excess amount for the month of September, October, November, and December was $1,000 per month. Your tax would be $1,000 times 1% times 4 equal to $40. The total tax you'd be paying would be $60 plus $40 equal to $100. Now let us talk about investing in high-risk stocks in TFSA. You do not lose your contribution room because of withdrawal. You regain that amount in the following year on January 1st. This works great, let's say if your investment has grown in value. But I wish to alert you to the following hypothetical situation. Say you had invested $5,000 in some high-risk security in your TFSA, and unfortunately, the value of that securities dropped to $1,000. You panic and you withdraw that $1,000. Now, the $4,000 loss that you incurred not only means that you lost that money, but it also means you lost that contribution room of $4,000 forever. You never regain that. You regain only $1,000 in contribution room in the following year. So think twice before investing in high-risk securities in TFSA. I would advise you to consult your financial advisor and see the best options for you. Your federal income tested benefits and credits such as old age security, guaranteed income supplements, or employment insurance benefits will not be reduced or affected by your withdrawal or your growth in your TFS account. the income you earn in your TFS account or the withdrawal that you make from your account will not affect your eligibility for federal credits such as Canada Child Benefits, Canada Workers Benefits, age amount, and the HST credit. Now here's another question. Can TFSA hold US stocks? Yes, TFSA can hold US stocks and ETFs as well. But America taxes dividends on US stocks and ETFs. There is a 15% withholding tax on US dividends. Other foreign countries may also impose tax on dividends in TFSA, and I want you to be careful of that. Well, thank you very much for watching this video. One of the questions for people ask me is, what is the difference between RRSP and TFSA? My next video will deal on that subject. And if you like this video or if you think this was helpful, please do not forget to like, comment and subscribe.